Public storage affiliate ticker PSA is currently trading at $288.50, and throughout this month the stock price fell from $314 all the way down to $288. Now over the past 6 months the stock is down by almost 1%, and over the past year the stock is down by almost 28%. Now, one of the reasons why I believe PSA will go up in price in 2023 is the rapidly increasing demand for storage spaces all over the US, which in my opinion was mainly caused by the pandemic and the realization that storing materials crucial for the operation of a business long distances from the factories a product is manufactured in can lead to huge losses when transportation chains collapse. And this is also why TIP ranks as an 18% upside for PSA and is predicting the stock price to go up as high as $400 in 2023. And with 6 buy ratings and 0 sell ratings, PSA might be the best company to buy now. But to find out whether this is really the case, we'll jump over to my fully automated REIT stock valuation spreadsheets, where we'll have a look at the 9-pill analysis and find the intrinsic value of PSA using the historical price to FFO model, multiples valuation model, dividend discount model, and all these models will lead to our ultimate valuation at the end of the video. Now, as always, if you want to download these fully automatic spreadsheets for your own personal use, you can jump over to my Patreon at the link in the description. But now let's get started and let's plug in the ticker PSA, and all the metrics will show up automatically. And as we can see, right off the start, the dividend yield is sitting at 4.13%, and the dividend payout is $12 per share per year. Now the payout ratio for PSA is quite high, sitting at around 90%, which would generally be quite bad, but as PSA is a REIT, they do not have to direct a large proportion of their FFO towards innovation, allowing them to utilize it as dividend payments. Now for those of you who don't know, FFO, or funds from operations, is in simple terms the equivalent of free cash flow for REITs, and therefore when evaluating REITs we use FFO instead of free cash flow. Next we can see that the analysts currently have a target price of $346 compared to the current price of $290.58. We can also see that the beta of PSA is very low, sitting at about 0.44, which means that with PSA you won't see as much volatility as you would see with the overall market. Now we can jump to the 9-pill analysis, where I have already plugged in the ticker for public storage, and right off the start we can see that the rating is 7 out of 9, a pretty solid rating. We can see that the revenue, FFO and net income have all been increasing very nicely over the past 5 years. There has been consecutive dividend growth over the past 5 or so years, sitting at about 25% annually, which is very good, and the long-term liabilities over the 5-year FFO is sitting at about 0.68, which is great, meaning that historically the company has enough FFO to pay for its long-term liabilities in about 3 or so years. Now in the middle here we can see that over the past few years there has not been a decrease in shares outstanding, and the price to FFO is higher than 23 by about 0.5. But this doesn't really bother me that much, as all the other metrics are very nice. But now let's move to our first valuation model, which is the historical price to FFO. We will plug in the ticker PSA, and as we can see, all the metrics show up automatically, giving us an intrinsic value of $308.85. Now to get this intrinsic value, we take the historical price to FFO and compare it to the current price to FFO and find out by how much the stock is over or undervalued compared to its historical price to FFO. And as we can see, PSA is currently slightly undervalued compared to what it has been trading in the past. But now let's move to the next valuation model, which is the multiples valuation model, and here I compare PSA to NSA, Cube, and Extra Space Storage. I took these companies' current stock prices and divided by their FFOs per share to get their price to FFO. I then averaged out that price to FFO and multiplied by the price to FFO of PSA to get an intrinsic value of $250.14, quite a bit lower than the current trading price by about $40. But now let's move to our final valuation model, the dividend discount model. And right away we can see that over the past 5 or so years, PSA did not raise their dividends at all. And only in 2022 they had a large raise by about 15%. And therefore over the next few years I project a growth rate of about 2.5%, and that combined with the next year's dividend and the WACC will give us an intrinsic value of $308. But now let's move to our ultimate value, where we average out the multiples valuation, historical price to FFO, and dividend discount valuation to get an intrinsic value of $289.14. And as we can see, that is about 0.5% lower than the current trading price. Now if we want to plug in a margin of safety of say about 10%, That would give us acceptable buy price at $260.23. Now personally I would plug in a margin of safety of about only 5% as PSA is one of the biggest storage companies in the world and therefore I believe it should be trading at a slight premium. I myself am waiting for PSA to drop to about $280 and that's when I will buy some shares of this company. If you liked the video, make sure to like it and consider subscribing if you want to see more valuations like this.